Again, welcome to my channel this afternoon, at least where I am at the moment this afternoon. Today I wanted to discuss a topic that concerns those that have been through the university system. And as we are all aware, most of those of us who have been through the university system have had to borrow some money to be able to pay for our tuition and even for our upkeep during the time that we were studying. So student loan debt is a big issue. At the moment I'm looking at this website, educationdata.org, and apparently in the United States, student loan debt is about $1.75 trillion, and apparently grows 6 times faster than the nation's economy. And they've said there that the outstanding federal loan portfolio is over $1.61 trillion. And you have about 43.4 million borrowers who have federal student loan debts. And they're saying there that the average federal student loan debt balance is $37,113. But then if you include private loan debt, the average balance may be as high as $40,000 US. So that's the amount of debt that on average students they have to pay. So but once you finish your school, then you have this added headache to repay your loan. And then you are faced with this difficult decision as to whether you should pay more than the minimum amount or just pay the minimum amount, just that. So it's a tricky decision, especially when you are earning a lot of money. Because if you're earning a lot of money, then you have excess cash, then there's that temptation that maybe I should just clear this loan so that I don't have to worry about debt and everything else. But then I think that when you're considering this, you also need to look at the interest rate that you are paying. If the interest rate is low, then maybe there's no reason why you should be paying more than the minimum amount, especially if it's lower than the average 8% return that most people get when they invest in the stock exchange. If you're getting that 8% and maybe the loan is 4%, you need to look at the two figures. And if you look at the two figures and say, wow, you are better off if the rate of return for investing is higher, then just invest and pay the minimum one when it comes to the loan. In that way, then over the long run you benefit more by doing that. So in my book, I think I would say the most important thing is to look at the interest rate and the other charges, because these loans sometimes may have other charges apart from the interest rate. So you have to look at that and then compare it with the return that you get from your investments. And that, of course, you also have to consider some charges. There's some, if you invest in some funds, you have all these fees at the end of the year, so you have to take that into account. And if you see that as a percentage I'm earning more, the rate of return in my investments is higher than for the loan, then I would advise anybody that if that's the case, then if you have any excess cash, invest. Don't worry about paying off the loan. And some countries actually the terms are even more favorable. Like in the UK, you have to reach a certain threshold. You have to earn a certain salary amount to be able to pay off your loan. Yeah, in the United Kingdom, I was just looking at their website. It's saying that the current threshold is $27,295 a year. So you need to reach this threshold before you start repaying your loan. Before that, then you can forget about paying. So if you look at the $27,285 a year, that's translates into £2,274 a month, or £524 a week. So if you're earning these amounts, 27k a year, 2.2 a month, or 524 a week, that's the minimum. And when you are paying for your loan, the good thing is you're paying the difference between the threshold and your salary. And they have given here an example where if you are making 2,310 a month before tax, then you will be required to pay £3 a month. And apparently, if to make it even much better, it says whether you reach the threshold, if you are earning less than this for the next maybe 30 years or so, after 30 years your loan will just be cancelled. You won't have to pay anything after 30 years. After 30 years, everything will just be cancelled. So those are very good terms. So if you're in the UK, if you calculated your return there and the amount that you're paying in the loan, and your return is much better, then I think it would just be better to pay for to use any excess cash that you have in making some investments where you make a better return than the rate, the interest that you're paying on these loans. Yeah. So that's my advice. So if you're worried about whether you should pay off your debt or invest, the thing to look at is the interest rate. If the interest rate is high, then maybe it's better just to pay it off so that you don't worry about it again. But if the interest rate is low and the terms are favorable, I think the best would be to, if you have any excess cash, invest it. You should only be worried about the minimum amount that you're supposed to pay here. That's my advice. Thank you for watching this video. And I would request that if you haven't subscribed to my channel, that you subscribe and make any suggestions, any advice that you have when it comes to student debt. And I will try as much as possible to respond to any comments that you make and make any improvements to the videos that I have at the moment. Thank you very much.